Property investment rockets in Glasgow. Research has identified the commercial property sector has continued to rise and is expected to exceed 2017 total of over £2 billion. By now, 1.7 billion has already been transacted, with a further 265 million currently under offer. And with volumes 90% ahead of the same point last year, Scotland is set to have a record-breaking year. The findings also reveal that over 50% of the total volume of transactions were made in Glasgow, accounting for over £382 million of investment across 16 large-scale deals, which sees an increase from 134 million at the same point last year. Edinburgh has previously seen the majority of this development, so this shift is very significant. The acquisition of the Caledonian Retail Park was one of the major deals to have happened in the commercial property sector, and this accounts for a large portion of this. The retail warehousing sector was also one of the significant rises in investment, which is up £60 million from the previous year to £400 million. Whilst over £200 million has been completed over 25 deals in the industrial sector, this volume has been hampered by a lack of supply. With increased supply in the market, there will certainly be a significant rise in volume transacted in the sector. Finally, there has been increased interest in alternative assets, including the Waldorf Astoria and Jury's Inn, though both of these were transacted in Edinburgh. Director of Investments at Savills recently said, having lived in the shadow of Edinburgh for many years, research suggests that perhaps we're seeing the beginning of Glasgow's resurgence, in particular amongst UK investors who account for some 60% of the office deals in Glasgow. Other major factors causing the rise of investment in Glasgow include the positive supply to demand ratio being the main one. Glasgow has one of the lowest levels of rent of the big 6 regional cities, and therefore demand is very high. This would suggest that there is room for growth, with current prime yield also at 5%. Glasgow offers an attractive discount over major cities in Edinburgh and Manchester. It was recently said that Scotland continues to offer investors, both UK and overseas, attractive opportunities that are perceived as good value in the context of the wider UK investor market. While investor demand continues to push down office yields in Edinburgh, there's already growing interest in Glasgow, with large developments underway.